The Maxi Trading Buddy here has printed bull, and that was a 552% spot trade volume or spot trade profit ago. And not only did we print bull at basically at the base of the parabola and at the start of this squeeze, but we also got the bear print basically calling the top and giving us a signal to like close out of this trade really, really nicely. So this was a really clean example of our trading indicator calling a incredible pump in the crypto. Not the crypto, in the stock market on this short squeeze.
Yeah.
So
stock market, it's been really cool.
I thought crypto because I see 550%, and that doesn't feel like stock market trading.
Right? You hardly ever see this with stocks. It's unheard of. And we got a bull print right before the takeoff, and then we actually got the bear print right at the top, and the whole thing. And you can also see how the bull print with the green band and how price pretty much kept bouncing on the green band, which is a bullish sign, So
it's crazy how the green band basically became the parabola too.
Yeah, exactly. It became like support. It became the parabola, and and now it's on bear. So my guess is, in a bear trend, it'll keep getting rejected on the band.
Exactly.
The band
and the band will
red.
flip to red. We'll start moving down. And then as usual, I think generally speaking, when we have a parabola breakout in any asset, we've noticed that when the parabola does eventually break, as we're seeing it breaking here, that the retrace tends to be around 80%.
So if it breaks down, it's like, it's anywhere generally from like 60 to 80% is what conventional like TA, that's what I've read. I mean, it's stocks, so like if it was crypto, you would see get down to it basically dropped to like 80%. You can almost
always. 60 is definitely a pretty safe bet for the stock market side.
For stocks, so that's still like a huge drop. And so we were positioned basically with because we had our indicator, we caught the whole thing. Like last week was we showed off Carvana, that was like huge, and that squeeze is still like going. We have Opera, it seems to have topped out, so like
we haven't gotten our bear print. We haven't gotten the bear print on the Carvana yet, but the bear print here on the Opera one definitely starting to show us that it's time to take our profits off the table here, and possibly even flip into like a short position on this. If the parabola is breaking, then it's there's quite a bit of room down to get back to like a reasonable price post this short squeeze, and to short sell this shares, I would say maybe taking like in the money put options isn't a bad strategy. Once we see this bear print coming in, we see the trend line starting to flip,
and also the band flip to red. So once you get a bear print match the band flipping to red, then it's like we can be sure of taking a short position or exiting along.
And then for me personally, if I am going to enter a short sell for this share, what I would be looking at for my strike price for that put option, I'd like to keep it slightly above the strength band. So I would definitely purchase in the money put options that are going to be, looking at this chart, probably around $21.75 or so, maybe even $22 as a strike price, which that would be right around where we're seeing that strength band. And that's about where I'm expecting us to like flip to red, start moving down. And and like you said, once it does flip to that red and starts pushing down again, we should expect the strength band to act as the resistance. So even on a retest, we shouldn't push above it anymore. And therefore, I would like to keep my option in the money by purchasing a strike price above that. But that's a personal kind of thing. I know some people are going to be like, oh, I'm going to buy put options at like $14 strike, way out the money at the moment. But, if we do get a retrace of 60%, those will be in the money. And of course, they're quite lucrative if you can call those correctly. Personally, I hesitate to purchase option outside of the money. Yeah. Buying out the money options is a little bit more of a gamble. It's also you tend to be paying a higher premium for them because those options are effectively worthless when you buy them. because if the price stays level, your option contract is worthless. And so when you're looking at buying in the money options, you need to basically calculate out the value of the option that is currently in the money versus the cost of the option contract itself. And that difference between those prices tends to make for significantly lower premiums. So if you're looking at your option like trading application, wherever you're trading options, the number you're looking for is the price to break even. Usually there will be a metric that's like, here's this option and this is what price like change you need in order to break even. You'll notice that in the money contracts have a much smaller change needed in order to break even, and that break even price should be considered your premium for the contract. But that's a little like tangent here about trading options. I'm very very excited to see this kind of move. And then to be kind of blunt, when it comes to companies like Opera here and some of the other short sell or some of these other short squeezes that are ongoing, the volume on those option markets can be very limited. And so
so even like
aware.
The liquidity can be pretty thin.
Yeah, and when the liquidity is thin, what that means is if you're market purchasing like option contracts, the spread between the bid and ask prices can be absurdly wide. Like I've seen a few options on, what was it, like Carvana recently, where it was like out the money options where the current ask was like 50 cents per share, so 50 cents times 100 for an option contract, so it'd be like a $50 contract, and then the current bid was like 1 cent. So like there was like so if you're not paying attention to the volume depth of the option contracts that you're trading, you should be, because if you did see an option that's like, oh, these are trading for 1 cent, it means that people are offering 1 cent, but somebody isn't offering to sell anything up until 50. So you can have absurd spreads, and generally speaking, purchase options always with limit orders, and always pay attention to the actual volume and the actual amount of liquidity available for those options, because it is not a fun situation to be in, purchasing options and actually being correct, maybe coming up quite aggressively, but then not being able to sell them because there's nobody buying options. So there's definitely, especially when it comes to some of these squeeze assets where it's like kind of off the beaten path stocks, you got to be aware.
It's not like you're trading Apple or something.
Exactly.
It's popular. So these that's why they can move like this. But even if but this whole move has just been, we profited not trading options.
Exactly. 500
just being like
spot
just holding shares and just holding it and exiting right on top. And that's like 552%. That's insane.
Much lower risk, much easier to find liquidity when it's just spot trading shares. This was easy trading, I have to say, especially with the trading buddy just being like, hey, buy now, sell now, like not much much else to it.
We've been writing a few squeezes. Carvana was and this is there, and then we're hoping to see more of this coming up. We'll let you guys know how we do on those.